Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Ben Jones, product development specialist with Nasdaq Index Research, to take a look at the Nasdaq Dorsey Wright Focus 5 Index. Ben, it's great to have you with us. Welcome to Trade Talks, and let's take a look at your first chart here because this index is new for the Trade Talks audience.
Yeah, it's something we really haven't covered in for a while, and part of it we just haven't seen a lot of sector rotation up until now. So this is the Dorsey Wright Focus 5 Index. This is an index that tracks the 5 strongest sectors from a first trust sector ETF lineup. So it's designed to identify momentum in the market and allow it to express that through sector exposure. And the way that Dorsey Wright does it, or Nasdaq Dorsey Wright does it, is essentially taking a universe of those first trust sector ETFs and ranking them by their relative strength, i.e. their momentum. I think a good analogy is any sports ranking, right? You look at, let's say, college basketball ranking on the right-hand side of that screen. Basically, the top teams are going to be ranked at the top, right? Those are the teams with the most momentum. They have more wins than losses. It's no different in the market, right? We just basically, rank those sectors by their relative strength if they're winning on a relative basis. And so that gives you an unbiased view of what's leading in the marketplace. And, for the last few years, we've seen it dominated by a few themes, few sectors. But right now, Joe, we're seeing some changes.
And let's talk about those changes. Moving along to your second chart here, where have those assets been allocated to?
Yeah. So if you just go back, let's say to, this time last year, we see that the index was heavily allocated towards technology, right? The index was about 62% tech. 20% of that was in an internet ETF, right? So that's where we saw some leadership. You also see some exposure to utilities and financials at that time. But we've seen rotation. So if you look at the index today, you can see that the technology exposure has come down, and part of that is due to a rotation that just occurred. The index rotated out of the internet ETF and moved into an industrials ETF. This is important. That internet position had been in the index since the index's inception, going back to February 2014. That's a long trend of leadership that we've seen some rotation out of. The rest of the index is, you can see industrials now makes up about 40%, technology around 40%, and then you can see a consumer discretionary piece. So this is just part of the story, part of the narrative that we've been talking about the last few months, where we've seen somewhat of a rotation from growth into value-oriented sectors and styles and themes. What's interesting is that this is relative strength, right? So because of, let's say, technology rotating out, it doesn't mean that technology is really weakening per se and is struggling. It just means that it's underperforming on a relative basis, right? So in this particular instance, the internet sector was up about 10% over the past 90 days, but the industrials ETF was up about 20%. So that relative difference caused industrials to rise in the ranking and caused the internet to drop in the ranking.
All right, Ben, and if we take a look at the last chart here, of course, everybody cares about performance. How has it performed?
Right. So if you look at a longer term period, 2-3 years, we've seen the index actually underperform. A lot of that's due to some of the rotation and volatility we saw, especially at the height of the pandemic. But ultimately, we see now just a shorter term time period, the last 12 months, the index is actually outperforming the market, right? So you're seeing some momentum carry this index higher compared to the S&P 500 over a 12-month time period. The index is, let's say, up slightly over 30%. The market's up just under 20%. So we do see it competitive on the near term. And the key is, are we able to see these trends persist? And so as we've seen the industrials, exposure increase, that's going to have more weight in the index and have more weight going forward as long as that trade continues. And so right now we see a mixture of industrials, technology, consumer discretionary, as these strongest areas within the market right now, as reflected by the relative strength ranking that is used for this index.
All right, Ben, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.